All right, guys, what is going on, dude? What's going on, chat? Hopefully everyone is having a good day today. I know I am. I know I'm having a good day, chat. How about you? How's everybody feeling? How is everybody feeling? So, Toby, welcome to the SMS community, my friend. Welcome, welcome. Members join in almost every single day. You gotta love it. So welcome, Toby. And if you are a new member to this channel as well, aka the Smart Money Stoics community, make sure you go to your Discord user settings. Go to connections, click on YouTube, and then sign in to the account that you signed up with. Once you do that and you connect your YouTube, you will then see the SMS Discord for you to join. All right, so that is available to you. That is one of the many perks that you get as part of a membership to this channel. So make sure you guys do that. Drop a like on the stream. Oh, button's not working today. Ripperoni. Drop a like on the stream if you guys are here. If you're ready to learn some stuff today, if you're ready to learn, drop a like. Let me know. Let me know. What's good, Felix, Carlos, G, Planet, Alex, C, Hermita, Eric Mendez, 2020, Bell, what's going on? Chat is open today. Chat is open today. Naruto, Flacco, message retracted, rip. What's good, Sean? Smiley, Hermita, sup? He said, y'all suck, I'm the best. Yeah, kill yourself. That's crazy. Anyway, guarantee you can't outtrade me, bud. Get the fuck out of here. What's good? Where was I at? Smiley, Hermita, Shay, Ibranith, MJ, Kesha, Carlos, ST Mark, Crispy J, Easy Muddy. What's good? What's good? Did I miss anybody? Did I miss anybody? What's good, Lee Bright? Yeah. I mean, obviously, I don't, mean that literally. It just means your account. It means kill your account. That's what that means. Don't ban me, YouTube. Don't ban me. But Anyway, what we have here on the Dow Jones. What can you tell me about the Dow Jones today? What can you tell me? What's good, Leon? Yeah, I haven't had trolls in a long time. I don't know why. Guess we're getting popular again. All the fake accounts, all the scammers, all the goobers coming back. You know? That's what happens when you start fucking winning and you start winning consistently in front of everybody. People get jealous. That's all right. Let them hate, motherfucker. We still gonna get TP. We still getting TP. Regardless. Doesn't matter. But I do appreciate the engagement. It helps. I do appreciate that. Felix says low resistant highs, liquidity spike while lunch. This was not actually during lunch. This was prior to lunch. Prior to the lunch hour that I use, which is 11 a.m. Central or 12 p.m. Eastern for that. So right before lunch. Let me see. Naruto says today price traded into an inverted daily gap within a daily imbalance. I didn't even know that. Thank you for sharing that, Naruto. I had no idea. I stuck to small time frames today, which I probably shouldn't have done, but hey, we're up right now, so I'm chilling. But I guess we'll take a look at it. Prices rallied since taking lunch lows from May 15th. Great observation, though. I like that. Thank you for sharing. Alex C says, ran the lows, now headed for the highs. I hope so. Not that we're supposed to use the H word around here, but yes, I am long. So normally I don't tell you guys if I'm in a position or not. I am in a position today. I am currently long from right about here. 39, 9, 13, or 14, maybe. One of those two levels right there. So I've already taken partials. I'll talk about that in a minute. And then obviously I'm at break even plus like 5 or 6 points on Dow or something like that. So I don't expect much from here. I don't expect much from where we're at right now. We are in the middle of the range from these highs down to this low. I think the low of the day has been set. It logically, like if there was no FOMC today, like meeting minutes, not FOMC, but meeting minutes. If there was no meeting minutes today, this would be our low of the day. I'd be confident in that. Because we have FOMC meeting minutes at 1 o'clock, which is in like 50 minutes. Don't forget that. Right? So don't forget to check your Forex factory. Wednesday the 22nd. We had CPI for pound this morning, and then this should be correct. So in about 45, 48 minutes, we have FOMC meeting minutes. So because we are leading up to that, I feel like we might not see a lot of volatility right now. We might just consolidate for this entire stream. So I don't know. We'll see. But that is the general idea. We took some lows, and matter of fact, I'll go ahead and show you that now so you can see it all of what I am looking at. We have Tuesday's low and an intraday low that was taken right before lunch. Why would I be longing here? Even though, despite it being lunch, I normally don't trade lunch. 99 times out of 100, I don't. Today I did. Why would I do that? Not because we're on a win streak. I mean, that might have something to do with it, but ego aside, why would I do that? Let me see. Dow took liquidity to the downside and made a SMT, so a divergence basically, while Nasdaq accumulated at, it has Asia high, excuse me, highs where it could trade into. Yeah, the S&P is lower at 1045, just like Dow is, and the Nasdaq was higher. So yeah, you're right. Right here at that 1045, price for Nasdaq was not even close to its pre-market low, not even close. And we do have small time frame equal highs for Nasdaq too. So that would be in alignment with Dow trading higher. Nasdaq could trade higher as well. So, you know, that kind of blends together. S&P, I have honestly no clue what S&P wants to do. We have a huge fractal high up here. We have this higher high here as well. Low, swept. Now we're in the middle of this range. So this to me is a coin flip. I really don't know. But if I had to say, if Dow Jones could trade higher, if Nasdaq could trade higher, then I don't see why S&P wouldn't also trade higher with the other two. So that would make sense to me. Not pun not intended, but that would make sense to me. So we'll see. So yeah, just in case you missed that, Dow or Nasdaq small time frame equal highs that we could trade for, and then Dow Jones has not just yesterday's high, but yesterday's high is also low resistant highs on the futures side. So yeah, that's what I'm looking at for right now. I agree, Naruto. Hermit, I was going to say that too. Imagine choosing to be a troll instead of learning, right? Hey, you know, time is limited, right? Seneca says we die every day. We're dying every day. It's also a book by James Rom about Seneca, dying every day. So, you know, you're going to choose how you spend your time. You want to troll? Go ahead. And that tells me all that I need to know about your trading performance. Like, that's it. You know what I mean? That tells me everything I need to know. Do you prefer to close trades before meeting minutes, or should I risk going into the event? If you're not in a trade already, no. I am holding through FOMC meeting minutes because I'm in almost at the low of the day. I'm in already. I'm up 60 points maybe. Yeah, roughly 60, 65 points or something like that. So I'm already up. So I have partialed already here. Why would I do that? So there's a lot of markups here, and this is an imbalance with the gray box. This is a potential mitigation. And I said potential because originally I wanted to see price trade into this mitigation before going for those lows. I was going to short that expeditiously. We didn't do that. Dow said nah, and then I sent in the Discord that Dow was weak, and then like 5 minutes later it took an absolute dump and traded for those lows, and I said LOL Dow Jones, right? But if we go to a 1 minute time frame, where a lot of people tell you to stay off of, not me. Okay, 1 minute time frame does this. What does that tell you? Remember, price, if it's going to run liquidity, it's not going to do it casually. It's not casual Fridays. It's going to do it like a magnet. It's going to do it very violently and very quick. Lions and gazelles. Okay? When the lions are hunting the gazelles, they're not going to go, there's a gazelle, let's just walk up to it, bite it in the ass. That's not how it works. They're going to sneak, they're going to get close, and then they're going to full speed, full sprint, full send right to that gazelle. And then it's lunchtime or dinner time. Price does the same thing. It's getting close, and then it's like, okay, yoink. So as soon as it does that, 850, or I don't know why I said 1050, 1055. What is that? 1045, 11, right? So that's a new 15-minute candle, a new hourly candle. I just went with the 5 minute time frame. As soon as that 5 minute closed, that next candle opened, as soon as it drops down, as soon as it starts forming a down candle, boom, that's a long. NCE. Okay, NCE. What does that mean? NCE means next candle entry. You're not waiting for a concept like a down candle or an imbalance or whatever. I mean, if you want to go down to a 15-second time frame, hey, do what you want. 1053, there's a small imbalance, inverted gap right there too. I'm not doing that though. I'm not trying to be perfect. Okay. As always, you want perfection, go talk to my exes because they're never wrong about anything. So you can go check them out if you want. When it comes to me though, I'm a flawed man. Okay. I'm not trying to get the absolute perfect entry. I can take a minute or two of drawdown and then bam, I'm up. Right? NCE, baby, next candle entry. Okay? Entering right after a stop run. Let me see. Price respected, market structure. It's in an uptrend. The body closed above. Being crawled on by a toddler. Nice, Nikki. Nice. I think I had just said that. I know your message came in before I said anything, but yeah, it's because we traded below that and then traded off of it and closed on a 15-minute time frame as well as a 5-minute. Okay, but I went with the 5 minutes. So right at 10:55, just before lunch, I'm long. Boom. So you're not exactly buying below old lows. You can do that. It's very difficult when you have a 1 minute printing the largest down candle you see on the fucking day. Right? Like that's scary to just straight up long that. I won't deny it. I mean, when you're trading with real money, yeah, it might be uncomfortable to just long below that. You don't know if that's going to be a stop run or not, just based on like a 1 minute or 5 minute time frame by itself. There are ways to do that, like with Nasdaq, of course. Nasdaq's higher. So if you think, okay, well, Nasdaq's an accumulation, that's manipulation on Dow, we can long that. I'd rather just wait for it to close and then trade the next candle. That's it. It's simple. The NCE is one of the most easiest things to do. You wait for the stop run. You just long the next candle. That's it. Where does the stop go? At the low. We'll leave it here for a minute. Why would you do that? Because remember, whenever you look at a stop run, if you believe that it's a stop run, it's not going to trade down there again. If that is a real stop run, it will not trade down there again. And it would be the same inverted as well. Like, say, for example, you thought that's a very weak stop run. That's kind of shitty. But if you thought that was a stop run, okay, next candle, short, stop at that high, very small risk, dumps. Okay, it's the same idea. So next candle, long, stop at this low, higher time frame, or macro intraday view, I guess, right? 40 is up here, so that's about a 1 to 4.5. Okay, that's worth it to me. Risking $1 to make $4.50, that's worth it to me. All right, so that's pretty much what that looks like. Now let me discuss partials for a minute before I forget. I told you I'd do that. This imbalance here and this mitigation potentially on a 5-minute time frame right there. So the RR, like at that particular point, like right in here, is about a 1 to 2. So that to me is a decent partial. So I'm like, all right, I'll partial there. And again, now it's PM session. We are we have FOMC meeting minutes in 35 minutes or something, so 37 minutes. So now it's like, all right, well, we partialed out, we're floating in unrealized gains. Now we just wait. And this might be the hard part for some people, especially when the market starts to go against you. You're like, oh shit, Oh man, hopefully it doesn't come all the way back down here and get you out. Look, bro, if it gets you out, it gets you out. Like, what can you do? If it gets you out, it gets you out. If you've already partialed, then you're up on the day. Why would you be worried about it? Now you're just trying to let your ego get to you. Well, I want to enter at the low and I want to exit at the high. Okay, well, listen, bro. That's not going to happen on every single trade. If this ends up coming back down and getting me out, okay, then that's it. Like, I'm done. Probably not gonna do anything after that. And that some people might have a hard time dealing with. They may not like that. So I can't help you there. So we'll see what we do. And these other things are just small time frame. Like, I think that was just a small time frame mitigation. There was a gap here too. I was watching. So, but yeah, I don't know what's gonna happen. But I would like higher pricing if it was me. You guys cool with that? Are you cool with that, chat? I'm really not trying to force anything here, but I'm wondering if this ends up becoming an inversion or not. Right? Because it was an imbalance create on the way lower. Price just rips right through that. And then I'm trying to see, are we going to respect that to go higher? Don't know. Price action is usually going to be pretty janky right before a news event of some sort. So don't be upset if the concepts that you're looking at don't work. Make sense? What's good, Willow? We might, Libre. I'm not sure. But our leading index for today is Nasdaq. So that probably would have been the better long. But if we do look at that for just a second, one thing that I did not like about longing Nasdaq is because of well, quite a number of things. Number one is these lows in here. Those two right there. That's our equities open low right there. And then just a pre-market low. So that to me could be a run. And then it's also hard for me to justify longs when we've already taken like a higher or previous level of liquidity. It's just hard for me to put real money at risk after a target that I typically look for has already been met. If that makes sense. So it's just more difficult for me personally. Okay. I mean, the best thing that you got going here is the Dow highs that it could reach for, and then this small time frame consolidation with these highs. But I don't know. I mean, is that something that you really want to put money on, you know? Demo, you can do whatever you want, but when it comes to real money, it's like I need something higher probability. Okay? So, anyway. This shit looks like it's about to come back and get me the fuck out of here. That's what that looks like. So. Oh well. Perhaps NVIDIA is the catalyst today. I thought the same. So, NVIDIA, did they have earnings pre-market or is that aftermarket? Because if it's aftermarket, there might be some finesse on Nasdaq and maybe ES, but I don't know. All right, Carlos, that's crazy. that is insane. What's good, Joseph? All right. Anyway. You guys have any questions for me so far today? We really didn't look at the ETFs, did we? We'll go take a look. The Dow Jones ETF looks horrible. This looks horrible. We have no wick right there either on the ETF side. So we might even come for that. And if that's the case, yeah, I would definitely be out. Like, it would stop me out in profit. So, but similar story. There's Tuesday's low, sweeps that. Next candle, we trade higher. But just look at the Dow Jones, bro. Like, just look at it. This is so ugly. The future side that was it. Like, those highs on the future side was it for me. But I looked at this and I have no idea what that wants to do. That's another reason why I would partial and go BE as well. Yeah, this just looks janky, janky, janky. SPY. SPY is hard to say. Oh, well, that's not hard to say. Equal lows at 530.16 for the ETF side. So that might be an area of liquidity. And for triple Qs, I believe we're at all-time highs for the triple Qs. So I'd be careful with that. Yeah, Cameron. Yeah, it is. It's being goober of the day. It's being goober of the day. That 1110 candle has no wick on it either. So yeah, it's hard to say. You know what would have been a lot better is these highs right here. If those highs would have been equal, oh yeah, I probably would have sized up a little bit more, to be honest. Like, let me just put a wick on here real quick. Yeah, like if we had something like that. Yeah, like that would have been beautiful. Because this would probably be a retracement to go up for that. But that is not the case. But that is not the case. Just like Flock on the Discord today, I don't know what to say about the indices today. Yeah, me neither. I mean, obviously I want higher pricing because I'm long, but that doesn't mean, you know, that we can't go lower. We can still go lower. NVIDIA is set to report after market close. A 10% move is expected by the options market. I don't even look at the expectations and stuff like that. But I guess we'll see. You guys are more than welcome to watch it. Hold on, what did you say? Look for options. Puts in the money were like $4,000. $4,000? Oh, fuck. Yeah. Yeah, might get stopped out, chat. Might get stopped out. Yeah, very, very heavy mix. Oh, you know what? That at 12:30, this is a new 30-minute candle. So this current candle, that's a new 30-minute candle. So, oh well. Mario said, can you please take a look at Tesla on the daily swing low now, or do you see it come down to the daily gap first? I'm probably out of Dow by now. Oh yeah, I'm definitely out by now. This looks pretty horrible. This looks pretty horrible. Tesla's been too... Tesla has always been very volatile. And we did a little bit something back in November, and I haven't touched it since then. I mean, look at all the gaps in here. I don't like that. Not, I mean, certain setups, sure, but this just doesn't look good. April 2023 was swept in April 2024. We gapped higher from some sort of earnings in here and then back into this down candle here, but I would not trade this, dude. Or if I did, I would expect drawdown. I just don't like it. I don't care for it. From what I've seen on Twitter, I think a lot of people have posted articles and stuff about a lot more heavier competition with the electric car market and all this crazy shit. So I don't know. And if I can't find something high probability, I'm not going to touch it. So, you know, Nasdaq is up today and Tesla's down 3.6%. So that's, I don't know, it doesn't look like a good sign. Excuse me. Nasdaq's at all-time highs and Tesla just continues to trade lower and lower and lower. That's just a sign of a weak stock. So that's pretty much my thoughts on that. How do you deal with a losing day when you haven't had a losing day in a long time? I feel like some sort of ego forming. Well, I have a lesson plan already. It's over on my printer. And I'm going to make a video about that pretty soon. But you just have to realize, man, not every day is a winning day. You know, and you just understand that you have the rest of the week or the rest of the month. You know, like a losing day doesn't mean a losing week. Losing week doesn't mean a losing month, you know, so on and so forth. So, ooh, shit. Ooh, shit, chat. Look at that. Getting some volatility before meeting minutes. Huh. Well, I guess I was wrong about the volatility, chat. Look at that shit. New low on ES. New low. Oh, God, Dow Jones. This is why I go break even, my friends. Jesus. So NQ is probably running what? Oh, yeah, those fucking lows down here. See that shit? That's why it's hard for me to long anywhere in here because of that. Just reached into that and beyond that a little bit too. That's why it's hard for me to long when there's lows for this exact reason. Okay. How do I know when to go break even? Just taught you that. Looking at other assets to manage the trade that you're in. How do you do that? Just taught you that. When to take partials. Just taught you that. But yeah, so coming back to the ego for a second, this is why we're smart money stoics, to learn how to control that type of thing, like your anger, your frustration, and even ego, right? Ego is the enemy, Ryan Holiday. You know, understanding that. Matter of fact, I just watched A Man in Full on Netflix. It's a short, it's like six episodes. And A Man in Full is actually a book by Tom Wolfe, and it has to, you know, it's based on like the male ego, right? So ego destroys businesses and even economies, and it will definitely destroy your trading account if you let it. So you're either going to learn the hard way by going through something like that, or you can learn from other people's mistakes. So you have to calm that down, dude. So yeah, the S&P with that double whammy, Jesus. Dow Jones with the double whammy too. Nasdaq is not making a new low here. Nasdaq's not making a new low, but it has traded into internal range liquidity. That's what that is to me. Liquidity within a range below lows. That's what it has traded into here. So I'm wondering if this is going to be a stop run to go higher. But I can tell you now, I'm done for the day. And I think I mentioned that earlier. I said if it comes back down to get me out, I'll be done. And that's what I am. I'm done. I'm not going to re-enter on something like this. Because then I might screw around, take a loss, and then have an L on the day. And then I'll be kicking myself later like, well, what the fuck? You said you weren't going to trade, and then you traded and took a loss, dumbass. So I'm just going to leave this alone. But yeah, that's interesting that we're getting that volatility here. That is interesting. Let's go see what the dollar is doing. No, I haven't looked at the dollar on a stream in a while. I don't know. I do not know. We have, let's see. I don't even know what, that might be a small time frame level of liquidity. We're just going to borrow that. So we have 104.39 ends up being equal lows for the dollar. I'd probably pay attention to that. I just don't know if meeting minutes is going to give us volatility to go down there. I don't know. But that is interesting. We have that. Daily time frame. We have traded back and up into May 15th's candle, which is an imbalance here. So just not sure. It's kind of difficult for me to justify shorts after you've seen a really nice run like that. It still can trade lower, but I don't know. It's difficult. So, I don't know if this will be something to pay attention to or not either. Hard to say, but imbalance on the weekly, traded into, away from it, so it was respected, and then we traded through it, back into it last week, respected this. So we might have a inverted imbalance on the weekly. So I feel like there might just be a little bit of conflicting information here. Would you prefer to trade one intraday style or also trade, for example, a continuation? Almost everything I do is intraday. Almost everything. So on the future side, definitely. But it just depends, man. It just depends. I don't have just one trading model. I don't just have just the mitigation model or whatever. It's like, no. We have the next candle model. We have the mitigation model. We have the second leg model. The Y slime model. Like there's a lot that you can do. So it just depends. The easiest way to really, let me go back to the Dow for just a minute. Oh Jesus. It's still gone. I'll leave this up here for a minute. So this is kind of the best way to explain it. The market works in stages, okay? We probably are going to make a new low of the day for Nasdaq. That at this point doesn't surprise me. That would be London's low as well, following suit with the other indices. So I know I've said this before, but if you look at a MMXM model, or if you look at a Wyckoff model, you're going to understand that there is different stages. There's consolidations, there's reversals, there's continuations, right? And so if you just go, well, I just want to trade reversals because that offers the best RR. Okay. Well, if you only trade reversals, you exclude every opportunity for a continuation. And there's Nasdaq following suit with the others trading lower. So when you choose to only trade, let's say, for example, one asset, you shoot yourself in the foot because you're excluding everything else. And it's the same with the trading model too. If you only have one model, then you're excluding like dozens of other models. Nasty run lower. Nasty run lower. That's what I meant to do earlier, because one of you mentioned the daily time frame. Let me see. Large imbalance there. I don't know if I would really consider this as a as an inverted imbalance. I wouldn't consider that. But yeah, so it traded higher here on the daily, and then it has traded again back into this here. So, well, that's that, my friends. But anyway, back to what I was saying. You can find a model, say, in here, or you can find a model in here. You can find a model in here, and you can find a model in here, right? So like finding some sort of long in here, some sort of long in here, some sort of short up here, and then shorting above that high right there is the Y slime model to go lower. So there's different models at different stages of price delivery. So to say, I want one style and that's it, brother, you're going to be one of those people that tweet, oh, I've only taken one trade in the last 2 weeks. That's not something to be proud of, in my opinion. There's opportunities every single day, and you've traded once in the last 10 trading days. What the fuck are you doing? Just watching and not engaging? Like, that's, you're proud of that? I don't know. It's just me. So I would learn first one model, work with that model, and then learn other models. People who've been long now be like, what's that, brother? Yeah. No, that's true. That is true. And you know what? I'm not part of any of that. I'm not part of any of that. Because I got out on the way lower. So, fine with me. That's why I was laughing, because I'm like, fuck, I would have took some pain on that. So it always feels nice to get out before the market really just... The market can make your whole week, or it can make your whole week. Know what I'm saying? You know what I'm saying? So I forgot like where that meme is at, but that's a meme too. What exercise did you do at your last company? You mentioned something in the interview with Chad, like I am patient or something similar. Oh, gee, that was the affirmations. I would spend like the first 5 or 6 minutes of every stream with affirmations like I am patient, I'm always managing risk, you know, shit like that. Just for something to do and a way to open the stream and a way to cater to those people who like that kind of shit. Just simple affirmations, but affirmations aren't going to do anything for you if you are undisciplined. So I would rather have somebody focus on their discipline than affirmations. So that's my opinion on that. I'm trying to see what I missed here, and I don't know. I don't know. Was good, Slim? What time frames do you usually cycle through and why? All of them. Monthly, weekly, daily, 1 hour, 15 minute, 5 minute. Not usually the 2 minute, but the 1 minute as well. Wouldn't it be better to... Oh, yeah, Carlos. I didn't see your comment, but that is... Yeah, I answered that. Yeah, learn one model first and then learn other models. But if you can't handle it, then don't. But I mean, think about it. When you understand price delivery, reversals, continuations, you know, first leg, second leg, shit like that, then that's going to open up doors for you. Because you're going to go, like, with what I did yesterday. What did we do yesterday? Was it ES? Damn it, chat. I can't remember. Yeah. Oh, yeah. Now I remember. Okay. For example, yesterday, we were looking for higher pricing on S&P, right? Yes. Highs as the target. And we were I was stalking, you know, how we traded lower. Short-term liquidity run, retracement into a gap. So that would be like the low risk buy. Or short or longing right after a stop run too, in a discount. We traded through this up candle here. That's when I mentioned in the Discord we should see higher pricing. Then we traded right back down into a reaccumulation for what? The run higher. So that is a model here, buying below old lows. That gap here as an inverted gap, that is a model. The reaccumulation is a model. This imbalance is a model. That down candle is a model. And then just the understanding that the reaccumulation is the second stage, that's its own model as well. So that's like 4 or 5 models right there. So just because you didn't get the low or the gap, that doesn't mean you can't enter later. And that's why knowing every stage of price delivery is important, in my opinion. But it's hard because it's a lot of information. Okay? So if there's anything you learned today, it's running, or taking partials, when to go break even, how to utilize correlations for trade management, and understanding that having only one model is shooting yourself in the foot. So sometimes people think that the market, you know, are complicated or whatever, and it's like, well, yeah, you're making it harder on yourself. You're making it more difficult than it needs to be. self-imposed slavery, as Seneca would probably tell you. The most shameful form of slavery. I have found one trading style. For example, I want Asia to consolidate, or also London to drop, and then I want New York to reverse, and at that low I want too long, aiming for London or Asia's liquidity. Nothing wrong with that, but it's hard for me to trust a continuation for lower prices. I always want to see the reversal. I don't know why. You know, one thing I never did care for is the Asian session, or like the Asian range. People ask me about that all the time, and I don't use it at all. At all. I don't even bother with it. I don't give a flying fuck about the Asian session. I just don't. The range, what happened, I don't care about it. I care about liquidity, and I care about the various stages of price delivery, and I care about concepts that overlap with inverted concepts on the way to liquidity. Done. You're welcome. Affirmations over time can reprogram your subconscious. Well, there you go. But you need discipline too. The Dow ETF should be clear. The Dow ETF makes me want to throw up, dude. Like, I look at this and I don't know. I'm like, ugh, brother. You know, that meme or that short video, right? It's just gross. I don't like it. I just don't like it, chat. And we have a gap here, but I don't know. Just don't know. High, lows, swept, and then middle of the range. 50-50. I wanted higher. We went lower. So low probability conditions. You guys know that when price is in the middle of a range, it's a lower probability, right? There you go. You learned that too. How do you know when to use the imbalance or the mitigation or the gap or whatever? Nice. It depends on what's printed there. It depends on what has been printed. We get a couple minutes. I want to watch live price when we get to the FOMC side. If you look at this, if you were looking for an imbalance in here, you didn't get one. We have an up candle. This is an up candle, but it trades lower down to this previous wick and then trades off of it. There's no imbalance there. Just the inverted gap. That's fine. That's enough. Toby, refresh your screen or refresh your browser. But yeah, that's a good point though. We are near the end of the stream. Drop a like if you guys got some value today. I would appreciate that. This up candle here acted as, I hate the word resistance, but price was sensitive to this, right? Price traded into that up candle and got sent lower. So there was sensitivity here. This is a old level of distribution, right? Price is bearish from there. You can see that. Okay. So when it got traded through at 910, right? We're above that. Doesn't have to close above it. Despite whatever Twitter will tell you, doesn't have to do that. We get above that. Okay, cool. This might be reaccumulation, meaning it was once bearish, now bullish. Old distribution becomes new accumulation. What you sow, you shall reap. It's printed there. I don't really see this as a mitigation. I mean, I guess it can be, but it's an ugly version of it. It's just old distribution becomes reaccumulation, or yeah, because accumulation was here and then reaccumulation here. Like I said, knowing every stage of price delivery is going to help you, because you're going to understand if you're in a good trade or not. Like if you're in from down here and then you watch reaccumulation go higher, then you're in a good trade. What I did today, for example, next candle entry. Okay, we're higher. All right, well, what do we do here? Either this is going to become an inversion or it's fucked. Like, you know, excuse my cursing, but it's like, if this is going to be an inversion, then it's going to hold. And if not, then it's probably going to trade lower. Right? Imbalance, not bearish at all, and then it trades back into it and doesn't respect it for the inversion kind anyway. So it's not neither bearish immediately, and it's not bullish immediately either. So if it's not bullish, bearish. So you can't be afraid to manage trades. You know what I mean? You can't force your, but we got highs up here. Yeah, we do. And that's a target that I love, and I'm willing to put real money at risk on that. But just because I'm up doesn't mean that the market won't come back and get me out. You take enough trades and you're going to find out. And this is the worst type of trade when you get a good entry. The market goes, let's say, what was this, at a 1 to 2 when I took partial, like 1 to 2.5 or something. You don't take partials, you don't move your stop to break even, and then the market comes down and gets you stopped out. And you were up on the day, now you took a loss, because now you're going to feel like shit. Well, yeah, in my opinion, you didn't manage the trade correctly. You didn't pay yourself, so you played yourself, and you didn't reduce risk, and the market came back for your stop loss. And now you lost instead of winning. In other words, you fucked up. Not every trade is going to be like yesterday. Now we have meeting minutes. So we'll see. But like back in here, this was instantly profitable, instantly reaccumulation to TP. Those are the best trades. But not every trade is like that. Okay? Not every trade is like that. You see that little spike right there, dude? Let me see. This is yesterday's low for ES. Dow saw a little spike as well. Nasdaq kind of spiking as well. Yeah, they pretty much all three made like lower lows on smaller time frame. But I rock with it, chat. I rock with it. I'm curious what this is going to do. So we'll get this a few minutes. We won't be here all day. You can watch the dollar if you'd like. Small time frame lows down there. Small time frame lows down there as well. So 104.55 and 104.39 have some simple sets of lows for the dollar. And then for the indices, I would still keep this up. This may not be tagged today, but just above 40,000, that might be useful at a later date, because there's still going to be liquidity here, especially if today's like a massively down day. There's definitely going to be liquidity here. And again, I still don't know what the other indices are going to do. There's your previous day's low for ES. Just grab that. And then Nasdaq, yeah, I don't know. Small time frame lows here too that got wrecked. So hard to say, man. Hard to say. But definitely getting some volatility though. So in its current time and price, since it's broke down and started trending lower, would a potential re-entry for a sell be coming up for London session for Nasdaq? I don't trade indices during London at all. I sleep during London. And I used to trade London, but I would prefer currencies, not indices during the London session. You can still get movement, of course, but you get a lot, in my opinion, you get cleaner movements and just better movements in the equities market versus London. Yeah, I agree, Bright. Certain levels of liquidity are left open for a longer amount of time. So, I can't always tell you like, oh, these highs or these lows are going to be left open and then we should trade higher. We do that sometimes, but I don't do that all the time. So, I'm not perfect. You guys realize that? Like sometimes I look for higher pricing and it goes lower, like today, for example. But there are still ideas that you can utilize to not lose money though. Going break even, taking partials, right? Moving stops in your direction, things like that. It's trade management. It's a skill set. You understand? But yeah, I'm not going to touch this afternoon. Yesterday was fucking phenomenal. Yesterday was a beautiful day with ES going higher and Dow going higher. And then Monday, what did we do on Monday? I don't even remember. But Monday was a good day too. So today it's like, bro, meeting minutes. If you can't find or frame anything, then don't. Walk away, dude. Walk away. Go read a book. I'm really close to finishing Deep Work by Cal Newport. And I feel bad because I remember this yesterday. One of you asked about what I thought about it, and I think I neglected your question on accident, of course. But I'm almost done with Deep Work by Cal Newport. It's not a bad book. Oh, that's a long wick right there. It's not a bad book, but I think there's a lot of fluff in it. Like I took notes, obviously, but normally for a book this size, I probably have like 3 or 4 times the amount of notes than I have for this one. So I'd probably give it like 2 out of 5 stars. I'm still going to finish it, but I wouldn't recommend it unless you are a writer or some sort of creator. Because I can easily think of a dozen better books for creators than this one. So it is what it is. But yeah. So any last minute questions before we hop off? Because I'm pretty much done for today. I'm pretty much done for today. We're getting some pretty volatile. We have like some serious wicks right here. So like this is that is your meeting minutes open, right? And we have no wick right there. It's also the opening of the hour. There's somewhat equal highs here, right? Like somewhat. Fractal low. What is this? Previous day's low, right? Yeah. So we trade lower, and I don't know, we're in like 15 points or something. 17, close enough. So we run down and then we trade higher, and I might expect higher pricing, but again, I'm not going to trade this. I wouldn't trade this. But I would watch it though. I would watch to see what we do. But I'm not putting real money at risk here. Okay. I'm wondering if it would make sense to knock people out and then yoink it higher. So, yeah. That's what I got for ya. All right, chat. Well, that's gonna be a wrap. So thanks again for being here. If you got some value, drop a like on the stream. My button still doesn't work. Sometimes it does that shit. Can't stand that. Drop a like on the stream if you got some value, guys. And again, congratulations to our newest SMS member from earlier today, Toby. Right. So make sure you join the Discord. Make sure you do all the you get your connections and stuff all connected, so you'll be able to see everything. And we'll be here same time, same place on Friday. Thursday is going to be our market review. We do market reviews every Tuesday and Thursday. That's for members only. But I live stream for free Monday, Tuesday, Wednesday, and Friday of every week. Every week the last like 15 months. Minus times that I lose power from the weather. Minus that, I don't think I've missed a single stream. For free. All right. So be blessed. I'll see you tomorrow. Or Friday. Sorry, I'll see you Friday. And yes, Memo, I would use very similar models to the one that I use for indices, yes. Models are universal. It means it doesn't matter what you trade. They all do the same shit. All right, man. Y'all be good. I'll see you Friday.